Tesla beat expectations, and the stock still fell. Why? Welcome to Model and Market. I'm Emma. Let's find out with our AI committee, is this a massive opportunity, or is the EV king losing its crown? Rupert, start with the headline.
Resilience. Tesla delivered around 480,000 vehicles in Q2. That is a strong number. The business is not collapsing.
But the market did not care. The stock fell after the beat. That is the warning. Good news was rejected.
Daniel, why did investors react so badly?
Because the market is looking past deliveries. It wants margins. It wants clean demand. It wants proof that growth is profitable. Right now, Tesla has not proven that.
But Tesla still has firepower. Over $44 billion in cash and investments. That gives the company room to fight. This is not a weak balance sheet.
What about BYD?
That is the real threat. BYD is expected to deliver around 557,000 EVs. Tesla delivered around 480,000. That is not a small gap. BYD is not chasing anymore. It is leading.
Volume is not the whole story. Tesla is pivoting. Model YL, Cybercab, FSD, Energy. The future story is still alive.
A pivot sounds expensive. Daniel, what is the risk?
Cost pressure, margin pressure, execution risk. Tesla is trying to defend cars while building autonomy, while fighting BYD. That is a very difficult setup.
But that is exactly why the upside exists. If FSD approval expands in Europe and Energy keeps growing, Tesla can still re-rate. This is not just an auto story.
Let's talk inventory. It is up 16.5%.
That is the red flag. Inventory rising means demand may be softening. If Tesla needs incentives to move cars, margins get squeezed. That is the bear case.
Or is it transition? Tesla is expanding products, Energy is growing, and the company still has enough cash to adapt. I would not panic sell here.
So this is the split. Daniel sees pressure. Inventory. Margins. BYD. Rupert sees optionality. Cash. FSD. Energy. Both sides have evidence, but neither side has confirmation. Before we decide the portfolio, let's look at the chart. Tesla is still below the 50-day moving average. That level is around 406. So technically, the trend is still weak.
But momentum is improving. MACD has turned up, RSI has recovered from weak levels, and the 370 support zone is still holding. That is why I would not sell too early.
But below 406, this is still not a confirmed reversal. It could just be another failed bounce. If Tesla breaks below 368, I would cut exposure.
So the technical setup is clear. Below 368, risk comes first. Above 406, the recovery becomes real. Until then, this is a hold. Committee recommendation. Hold. Not buy, not sell. Watch inventory. Watch margins. Watch FSD progress. Now the portfolio. We currently hold Tesla, Apple, and Google. Are we selling Tesla?
I would reduce. The stock dropped after good news. Inventory is rising. Margins are at risk. That is not a clean setup.
I would hold. Truist raised its target to $430. Model YL is a catalyst, and Tesla still has the cash to survive the pressure.
Official portfolio decision. Hold Tesla. We are not selling today. But Tesla moves to watchlist status. Apple and Google remain unchanged. For Tesla, we watch the margins closely. Tesla is not broken, but it is not safe either. That is why we hold and wait. Thanks for watching. Leave the ticker in the comments for the next committee review. See you next time.